So we've got the market ending the week in the black, but we do know that there is concern that, you know, the elections next year could well change things. And also, of course, people are taking cash in order to be able to pay for some Christmas goodies.
Well, thank you, Godfrey. It's an interesting day in Nairobi. I mean, the market has been down for the better part of the week. We saw the indices closing south right from Monday. But today, our fortunes changed, and we see that the market closed on the green. In terms of moving on from this place, yes, people want money for Christmas shopping, and would expect that to have an impact on the currency.
So let's look at what moved the market today. Now we had Williamson Tea amongst the top gainers today. Is there any specific reason why that stock is moving?
Well, there is a lot of speculative pressure on Williamson Tea. I wouldn't say that it's something fundamental or substantial, but it's just a few trades here and there that made the counter to move up.
One of the other stocks that's been in the news this week has been Kenya Airways. We've got that ruling by the Industrial Court, which has ordered the company to take back workers, 447 of them that it fired earlier. Now, what's been interesting for me as an outsider watching what's happening in the Kenyan market is how everybody that is spoken is almost condemning the judgment, and no one is talking about really the difference that this makes to the workers themselves who had been out on the streets.
Well, at the end of the day, the interest of the investor is financial or capitalistic in nature. You'd expect that the investor out there would be unhappy with the ruling that interferes with that interest. That said, I think it's the onus is now upon the management of Kenya Airways to ensure that these 400 people add value to the company and create value for the investor.
What do you think is likely to happen, though? Are they going to take those guys back, or are we likely to see a situation where perhaps they will try and fight this out in the courts and appeal the judgment?
The CEO, Titus Naikuni, gave his word that they are law-abiding and they are going to abide by the ruling of the courts to the effect that they are going to reinstate the fired workers. And so letters were already being issued towards that direction, and they were being reinstated. And of course, we are just expecting, or the company is just looking forward to posting the old workers back to their stations.
Yeah, but as an investor, what would you like the company to do?
Well, right now there are very few choices from the company's point of view. I think what remains is for the group management to ask themselves, how can we create value with the 400 people that we have who are actually skilled and are a resource to the company? How can we create value using this resource so that there is value to the investor? To me, that would make all the difference, as opposed to whether to hire or fire.
Okay, let's move on to CMC. Now, they lost the contract, the franchise contract for Jaguar Land Rover franchises. Now, just how big a blow is that to the fortunes of this company?
It is big. It is big on two fronts. First, Land Rover itself is a major brand in Kenya, given our historic ties with the British government or the British culture. So Land Rover is big here. But beyond that, there's a fear that if one contractor pulls out, then there are other people who might, there are other companies that might pull out as well. And that is the bigger fear in all this, because now if all of them pull out, or if a good percentage of them pull out, then CMC will remain a shell and not the real company that it is today.
But I suppose there's very little that they can do, isn't it?
Well, at the moment, there is very little they can do. I think what they can do is up their game and ensure that the management wrangles and everything that has been going on wrong in the company is corrected, so that there is longevity and better management.
Yeah. Now, one of the more interesting stories that I was looking at today that came out of Kenya is KCB signaling that it's going to reduce the rate of loans, the rate of interest that it charges on loans to 17% from 19% from January 2013. And we've also seen any similar indication from Commercial Bank of Africa. What's interesting for me is that you have got these moves coming a very long time after the central bank had cut its benchmark rate. Now, I will tell you what happens here in South Africa. The moment the central bank cuts interest rates, the banks scramble to be the first to announce that they are falling in line with the central bank. Why is there such a long period before banks fall into line to help the transmission mechanism?
Well, first, the banking industry has oligopolistic tendencies where they collude to eat together, as it were. And they have made huge profits out of this. I was telling people at the beginning of the year that out of these high interest rates, the banks will make a kill. And they thought I was joking. And here it is. They made huge monies out of it. And one of the reasons why this is happening is because as it has always been, the Kenyan market is underbanked.
Yeah.
So that competition is on the minimal. Even if you came in and you just opened your doors and you said, I'm a bank, you probably would get business. And that is a problem. And because now they are coming to 17, but the base lending rate is much lower than that.
15%.
We are 13 now. Yeah, and so you'd expect that better rates would be offered to the consumer. As a consumer, I'm unhappy about this. As an investor, I'm just like, I hope this really adds up to the value at the end of it all.